All right. Well, good morning, everybody out there in webinar land. Thanks for joining us on this Tuesday morning. We appreciate you being here for our webinar today on COBRA Credits, the exciting world of COBRA. And we're going to answer a couple questions from last week's podcast, as promised. We'll be digging into some ERC credits there. Before we jump into today's show, first off, just thank you so much for being with us. This is part of our ongoing webinar series where we try to bring you the latest and greatest legislative analysis and everything you need to run your business and navigate the sort of changing both legislative landscape and technical landscape of payroll, HR, and everything that goes with it. My name is Kevin Wilson, and presenting today is my colleague Tracy Clark. We also have Nick Summer from our tax department on here. A few housekeeping measures before we dive into today's content. We will be answering questions throughout the presentation today, and if we don't get to any during the presentation, we will certainly get to those in the end. If you could put those in the Q&A section that you should see at the bottom of your screen rather than the chat, we'd appreciate it. We do record all of these webinars, and the Q&A plays nicely with it. It also means that folks can go to our website, dominionpayroll.com, and review these. So any information that gets shared, the deck, the actual presentation, and then any questions will be preserved there for folks to review. And I think that's one of the great things about this whole program that we've spun up over the last year and a half, is that we've really created a community that benefits from sharing this knowledge and working together and coming through all this together. So without further ado, I'm going to pass the mic to my friend Tracy. And Tracy, I think that we're kicking off with some ERC answers from last week. How are you doing this morning?
I'm doing good. Yeah, so we are going to address two questions that we got last week about during our ERC webinar that we weren't able to, well, I just didn't feel like I had a good enough answer to be able to just throw it out there. So I wanted to do a little more research, and I wanted to pull Nick in on that because he's our resident ERC expert. And I think we come up with some pretty good answers. So let me go ahead and put the questions up there and the answers that go with them. So the first question was about wages that were paid by an employer to employees who were related individuals, or would that be considered qualified wages? So Nick's going to take the answer to this one.
Yeah, so I believe the question, I don't know who asked it last week. The question exactly was who is excluded from the ERC eligibility, and those are pretty much the employees that are related to the employer under these bullet points. If you are a child or descendant of a child, a brother, sister, stepbrother, or stepsister, father or mother, or an ancestor of either father or mother, a stepfather or stepmother, a niece, nephew, aunt, uncle, and the in-laws. So son-in-law, daughter-in-law, father-in-law, mother-in-law, brother-in-law, sister-in-law. So any of those related employees that are related to the employer in any way don't qualify for the ERC program. And in addition, if you are a corporation, like if the employer is a corporation, then it is any employee who has 50% or more if for stock in the corporation. I think that pretty much covers that one. I know the link is right there. And if you have further questions, you can drop it in the Q&A section related to this. And then if not, you can just email us at questions@dominionpayroll.com.
So let me ask you this. The employer, is that an owner, and does it matter the percentage? So like, let's say my mom has 10% of the company. Are my wages exempt from ERC?
If an owner has more, for the way I understand it and the way I read everything that the IRS has put out thus far, if the owner has more than 50% of ownership in the company, then they don't qualify.
Okay, so it's relationships for a greater than 50% owner.
Now, if it's 50-50, it's a murky area, and the the IRS hasn't really put out exact verbiage on if it's a 50-50 split between, say, like spouses or, brothers or something like that in a company. I
But
would
the greater than
recommend,
50%, it does, that's definitive. So greater than 50%, if you're a relative of a greater than 50% owner, then your wages are exempt from ERC, correct?
correct.
Okay, all right. Thank you for that. Okay, let's look at our next question. So in this one, the person asked about whether or not their healthcare contributions would be eligible for ERC if they hadn't used them for PPP.
Yes. So the answer is yes. It can be allocated to the ERC program if it is, but there's no, it's kind of hard to keep track when it comes down to splitting it up sometimes. So there is no double dipping, and it says, although there is no rule prohibiting you from using the same pay periods, because the IRS has not put on any direct verbiage, it's hard to get around. I don't want to call them loopholes, but there's no rule saying you can't. You just have to make sure that there's no double dipping.
Right. And I will say too that our ERC report, that healthcare contribution, picks up both the employee and the employer's portion. So if you were going to try to use our report, our ERC report can't support this. But if you are aware of your contribution, not your employee's contribution, but your contribution, you can let us know and we can get those credits in there for you. It's going to take a lot of work. It will take, not a lot, it will take some work on the part of the client to figure out what portion wasn't used for PPP.
Right.
Okie doke.
But everything gets captured that way, and you're using as much of the program as possible. So
that's correct. Yeah, that's right. Okay, so we're going to switch over to COBRA if we don't have any questions on ERC, but if you think of something, please put it in the Q&A and we'll be happy to get to that. And we should say that we do have a way of excluding employees in our report. We didn't say that back on that earlier one, but we do have a miscellaneous field that can be added so that different employees can be excluded. Their wages can be excluded from the ERC if need be. Okay, we're going to look at the ARPA COBRA subsidy premium assistance. Oops, that says April 20th. I changed all
Tracy,
this.
I was just going to jump in and say, you asked me to check for errors,
Yeah,
and I'm going to go
all
ahead
of you. And look at
taking
that.
the loss on this one. This is my fault.
Dang it. All right, what is COBRA? So a lot of verbiage here. The Consolidated Omnibus Budget Reconciliation Act, that's COBRA. It gives workers and their families who lose their health benefits the right to choose to continue those group health benefits provided by their group health plan for limited periods of time. A lot of times it's 18 months, and that's under certain circumstances, such as voluntary or involuntary job loss, reduction in hours, transition between jobs, death, divorce, and other life events. And the qualified individuals may be required to pay the entire premium for coverage up to 102% of the cost of the plan. So some companies do still subsidize, some don't. But usually these premiums are a lot higher than what the employee was paying prior to their severance with the company or the reduction in hours. COBRA generally requires that group health plans sponsored by the employers with 20 or more employees in the prior year offer employees and their families the opportunity for a temporary extension of that health coverage, and in certain circumstances where coverage under the plan would otherwise end. COBRA outlines how employees and family members may elect continuation coverage. It also requires employers and plans to provide notice. And then I just gave the little DOL link there. So now, what is the ARP COBRA premium assistance? So basically, Section 9501 of the American Rescue Plan provided for COBRA premium assistance to help assistance eligible individuals, and they refer to those as AEIs. We're going to talk about that in a minute. So this allows them to continue their health benefits. The premium assistance is also available for continuation coverage under certain state laws. The AEIs are not required to pay their COBRA continuation coverage premiums. This program is going to cover that. The premium assistance applies to periods of health coverage on or after April 1st, 2021 through September 30th, 2021. An employer or plan to whom COBRA premiums are payable is entitled to a tax credit, and we're going to talk about that in a minute too, for the amount of the premium assistance. All right, so I'm going to go over a few questions and answers, hopefully. Okay, who's eligible to receive the COBRA premium assistance? So this is what I found on the DOL site, and I put that down at the bottom. President Biden signed the HR 1319, the American Rescue Plan Act of 2021 on March 11th. And this law subsidized the full COBRA premium for the AEIs. And then again for the coverage of April 1st through September 30th of 2021. Now, this is what you have to have. They must have a COBRA qualifying event that is a reduction in hours or an involuntary termination of a covered employee's employment. Must elect COBRA continuation coverage, must not be eligible for Medicare, and must not be eligible for coverage under any other group health plan, such as a plan sponsored by a new employer or a spouse's employer. So that last one is kind of the caveat there. So if they resign and go to another job, they have the opportunity to get health care through that other job, then they're not eligible for this assistance. May an employer or insurer require individuals to verify their AEI status? Yes. The notice confirms that employers or insurers may request individuals to provide self-certification or attestation of their eligibility for the COBRA premium assistance, including information on the AEI's eligibility for other qualifying group health plan coverage or Medicare. How long does the premium assistance last? It's going to go from April 1st through September 30th. So an employee who becomes eligible for another group health plan, such as a plan sponsored by a new employer or a spouse's employer, not including expected benefits, a QSE, HRA, or a health FSA, or they become eligible for Medicare, or they reach the end of their maximum COBRA continuation coverage period, generally 18 months from the day the employee was terminated. What types of reduction in hours will qualify for someone for COBRA premium assistance? Under ARPA, any reduction in hours that results in a loss of group health coverage will qualify an individual as an AEI. The notice confirms that this includes a voluntary reduction in hours, a reduction in hours due to a furlough, and a reduction in hours due to a lawful strike or employer-initiated lockout. It's interesting that this includes a voluntary reduction, whereas the full, like if you're severed from the company, if you leave, if you resign, that is not covered. Does a resignation in lieu of termination qualify as a voluntary termination of the employment, thereby eliminating qualification for COBRA premium assistance? The notice clarifies that an involuntary termination of employment is a facts and circumstances analysis of whether the individual experiencing the event would have left employment on their own volition. More likely than not, a resignation in lieu of termination means that it was not the individual's true choice. The severance of employment was, for all intents and purposes, an involuntary termination, qualifying the individual for premium assistance. Does involuntary termination include termination for cause or due to illness or disability? Generally, yes. The notice confirms that an employee who was terminated for cause or due to illness or disability is considered to have experienced an involuntary termination of employment. However, an employee who was terminated for gross misconduct is not eligible for the COBRA premium subsidy because such an employee is not eligible for COBRA continuation coverage. Calculating the tax credit. So employers can only claim the tax credit in the amount equal to the amount the employee would have been required to pay in the absence of the ARPA subsidy. So if the employer typically charges less than 102% of the premium or has offered the employee a premium subsidy pursuant to a severance agreement, the amount the employer would claim would be reduced accordingly. But if an employer increases the employee's premium obligation from the previous reduced amount, the employer can claim the increased tax credit. Separately, if an employer does not subsidize COBRA directly, but provides the employee a taxable lump sum payment intended for COBRA, the employer can still claim the full amount of the tax credit. All right, how can Dominion Payroll help? What you want to do is reach out to customer service. If you've determined that you've got an employee that is going to qualify for this, reach out to us at customer service at dominionpayroll.com, and you're going to receive the following request for info. Hello, and you're going to see your name. I'm following up regarding your questions on the COBRA credit. Your provider should have reached out to you to let you know if you are qualified. If you've not heard from your provider and you think you may qualify, please reach out to them. If you do qualify, here is the information that we're going to need. We need it broken down by the coverage month. We need to know what the COBRA premiums for the month's total would be, any administrative expense, and then quarter to date employees provided premium coverage. So you just need to let us know the number of employees that qualify there. We'll need these totals per month of coverage with the premiums and the administrative expenses totaled separately. That's how it goes in our system. That's how it goes in on the 941. And that's it. Those credits go straight to your tax liability. So it's absolutely worth it. Now, if you have some second quarter credits that you didn't take advantage of, you can still reach out to us. That's going to be handled most likely by Nick in our tax department, and he'll have to do a prior quarter adjustment to get those in. And at this point, it will be an amendment for second quarter to take advantage of that. If we have to do an amendment, it will be a refund because you've already paid all the taxes that would be there that COBRA could go towards. So that's how that would work. I'm sorry that was short, but it was sweet. I think I got all the information across that we needed. And that
I would agree with you there, Tracy. I think I understand COBRA better than I ever have. And
hopefully you don't need to use it.
Right. Judging by the lack of questions in the Q&A, I think maybe our audience has understood it well as well.
Excellent. Let me give a little sneak peek at next week. We are going to be covering the Virginia Overtime Wage Act now that it's become law. Became law on the 1st of July, and we're going to go back over that next Tuesday. I think there's an HR matters as well, but do you know the?
I don't know the topic of next Wednesday's HR matters, but folks, if you are a DP client, that email will come out later this week to let you know what the topic is and how to register. And yeah, I would say for folks on our Tuesday one regarding the Virginia overtime law, if you're a Virginia client, please do tune in. We try to do as much broad topic stuff, but we do have quite a few clients in Virginia. And so want to make sure that we cover that for folks. Yep. Tracy and Nick, do you guys have anything you want to add before we wrap up? Like you said, short and sweet today.
No, I really don't. Yeah, that pretty much covers that.
Yeah, I don't either.
Oh, let's see. We got All right, Stephanie has just written in. So let's see. Stephanie says, so if we have any employees who would be required for full-time to work 140 hours per month, but didn't want to commit to that, so we'll go part-time, or they can work anywhere from 0 to 120 hours per month, and is changing from full-time to part-time, is she AEI eligible?
So if they lose their health care coverage as a result of doing that, then I would say yes.
Yeah, sounds right to me. All right, Stephanie, hopefully that helped. Folks, it is 11:20, short and sweet today. But I will say, we are here for you at questions@dominionpayroll.com. So if you weren't able to get your question in today, or something occurs to you later this afternoon, reach out to us there. We're happy to help you. And as always, you can go to dominionpayroll.com and hit that resource link at the very top of the homepage, where we'll have a whole host of resources, previous recordings of these webinars. We'll try and have this slide deck up there by close of business today. Other than that, we appreciate you joining us today. Hopefully some good content and clarified the interesting world of COBRA insurance. That being said, I hope everybody has a great afternoon.
Thanks, Kevin. Thanks,
Sure
Nick.
thing.
Thank
See you
you.
guys.
Bye.
Bye.